index, right? And in this case, we're doing it with Nasdaq. So with NOCT, for example, investors can access the upside performance of the Nasdaq-100, and they'll have a built-in buffer over the course of 1 year of 15%.
All right, so are you using options to provide this buffer?
Yep, we've partnered with Milliman Financial Risk Management Group, and they're actually the ones who are layering these options. It's really simple. It's a static basket over the course of a year, and it's 7 different positions that basically allow us to put those bands on the market and provide that built-in downside protection.
All right, let's learn more about the Innovator Nasdaq-100 Power Buffer ETF. We also have a chart that's coming up that's going to tell us a little bit more about what it is designed to do. First question, though, why choose the index?
Technology is huge, right? I mean, technology is a huge grower of our economy, right? That's a huge driver of this country and how we got here, right? And the Qs, there aren't that many options right now in the ETF space, right? There are 6 or 7 ETFs currently. We want to provide a way to access the Qs and the Nasdaq-100 in a way that also has some downside protection available to you. So if you look at the chart here, basically what we're doing with that 15% buffer is you can see if the market has an extreme downward movement, right? It's down 30%, you're only down half of that because you have that 15% buffer. And you're also going to be capped out to the upside, right? You can't have your cake and eat it too. With the way these options work is you're going to have exposure over the course of a year, and volatility and interest rates are really going to drive how much upside potential you have over the course of the year. Those options will mature at the end of that year, and then you have a brand new buffer and a brand new cap the following year.
Well, I mean, clearly you're going to get that upside that we've seen over the past 10 years, certainly in the NDX, but it is nice when you have an election, when you have a December, when you have what we just experienced in August, where you don't have to necessarily worry about that much of the downside, and when the market corrects itself, then you get to participate again. Is this how advisors are using this ETF?
I call it a Swiss Army knife. It's a lot of different ways, especially with what we see in fixed income right now, with where rates are at. It can actually be used as a fixed income alternative, because if rates keep going down or if we're headed to a zero rate environment, this is going to give you that profile that you would typically expect out of fixed income. The easiest way is also as an equity replacement or an equity complement. So like I said, there aren't that many options right now in the ETF space tracking the Nasdaq-100. This isn't going to be your growth driver, but we don't know what's going to happen. Like you mentioned, we don't know what tweet's going to go out, what's going to happen in the economy, what the Fed's going to do. This just allows you to provide a backup in case you're wrong. And you don't go into the market naked, as we like to say. Just have that built in one nice, convenient ETF.
All right. Now, you're also providing education to advisors in addition to ETFs. Let's learn more about the web pricing tool by Innovator.
Right. So obviously, these things have a defined outcome, which I mentioned. So at the beginning, you know your upside potential, the index that you're tracking, as well as your upside max. So what we've done is we want to make it easy for investors to be able to get in and out of these ETFs in the intra period, right? Because they're ETFs, they're daily liquid, they're very efficient. So we built out a tool on our website, innovatoretfs.com/define, where you can go in, even say 6 months in to NOCT being launched, and you can actually have an outcome that day if you buy. So day one, let's say you have a 13% cap with a 15% buffer. All right, so 15% protection with a 13% maximum upside potential for a year. If you want to buy in 6 months in, that profile has changed. You might have a bigger buffer, you might have a higher cap, but you always will be able to know your current outcome. So it's updating with real-time pricing every single day, so you can buy at any point throughout the day and know exactly what your defined outcome will be.
Oh, I'm sure advisors love that when they're talking to clients.
We think so.
All right, Trevor, thank you so much for joining us at MarketSite.
Thank you.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.